Hi guys. Today I want to talk about AI quant retail workflow. Okay, all the fancy words you could put in it, just do it. But if we're being serious, we all know that we have this cool thing called Claude Code or any other AI agent that is excellent at coding and semi decent in trading, but you can't really delegate all that process of researching, looking for right strategy, understand the logic behind it, trust the edge, all of that. Claude sucks at it. Me personally, I want to handle that part. But the boring things like optimizing, testing one strategy with different parameters all over again and again and again across different assets or time frames or both. There is a way to do it better. Let's put it this way. So, a bit of an introduction here. I started learning trading professionally 4 years ago, and I've been in the market so far. And after second year, me being into trading, I was finishing my computer science degree, and I thought, I know all this knowledge about computers and stuff. Why wouldn't I use it for automating or making my process more efficient and gaining more edge in the markets? So I started digging more into Python, data engineering, all of that. And I actually coded a quite bunch of strategies back in the day manually. Just look at the size of it. I have my own project called Research Strategies because it was my project where I would go write or research some code, some strategy ideas, get the report, get the results, would be able to manually review it on the trading view charts, whether the logic is correct or not, any ways I could improve the logic behind the execution of my strategy, parameters fine tuning, basically all of that. And then straight like this, having the strategy deployed on the AWS server and just leave it there with a quite handy login and stuff. But then I switched back to more of a manual trading. I still use all this quant stuff, automated scripts and other things for improving my systems, looking for more new systems, blah blah blah, but executing manually or through MetaTrader or NinjaTrader. Okay, so I don't really need this engine no more. And still, even with MetaTrader or NinjaTrader or even PineScript with the Python bot deployed on a server, I was thinking it's all over the place. I need it all organized in a better way. So that's when I started doing this AI workflow project. It's still work in progress, but results are good so far. Just wait a couple of minutes before I'm gonna show you. So I had these strategies, right? A bunch of them. And it's just the ones that I did coded. There's like 10 times more of them in notes as a strategy ideas. There are others that weren't automated, like they're still being executed, but they're more of a manual approach. But whatever. Just to show you one example, we have candle rejection strategy. And here, just give me a second to recall the logic because it's 300 lines, almost 400. I'm gonna show it on the chart so you would better understand it. Let me hide the bands. So, candle rejection. If you remember candle patterns from very early trading lessons, okay, you would know the hammer pattern, the engulfing pattern, dodging star, reversal dodging star, if I remember it correctly. So this strategy, what it basically does on a higher time frame, 4 hour or more, it would mathematically define dodgy reversal candles like this. You see we have the highest point here, and then it closes with a super little body. Okay, it's all mathematically configurable. It could be also this one, doesn't matter. But the strategy idea is this. So we have this candle confirmed after the close, and if it meets our criteria, we enter short, put stop loss right above the wick, and then have whatever risk reward ratio we have configured. Just 2R, 3R, doesn't matter. That's basically the rough idea of the strategy, besides many parameters like stop loss offset, take profit distance, entry offset, break even rule, continuation exit instead of fixed take profit order, whatever. Time of the day when you're trading, for example, it's Sunday. I'm not sure if you would want to trade Sunday. Okay, historically, moves are not really reliable. It's a daily chart, so could actually be a great signal. Whatever. So we have this strategy. Then I have the idea and basic logic and parameters already created. What I wanted AI to do is to optimize the strategy from handwritten or early AI written code, poor code, into better Opus 4.8 version with much stable module design, and create sort of engine that's gonna run same strategy, optimize its parameters via genetic algorithm, and put it all in a nice dashboard view sorted by my criteria of preference, which is a consistency R squared. For you who don't know what that is, better to show it here. So R squared, it's basically how smooth and consistent equity is, equity curve. Imagine you have this smooth, steady, consistently up equity curve, right? Up and to the right. That's what you want. Not too volatile, because you won't have these swings of emotions when you're up so much and down so much. Okay, you don't want that. That's what R2 score represents. It's gonna reward parameters combinations that result in an equity shape like this. Okay, and it's gonna punish something like this, even though if it has bigger profits, or something like this, you know. Same profit in theory. You won't be able to see if I draw wide here, right? Okay, even though we have same profit, let's say here, I wouldn't be comfortable with this equity curve, but I would be comfortable with this one. So that's the idea behind consistency R squared. Second thing is compounded annual growth return. I want strategies that yield more than 10% a year at least on out of sample dataset. Oh, by the way, we also have walk forward analysis, in sample and out of sample split. So let's say we have this dataset. That's the Bitcoin chart. And if you create a strategy and test certain parameters, that's gonna result in best performance across this part of the data set. In other words, you optimize parameters in such a way they perform the best in this period of time, and then you double test it on another period of time to see if it continues yielding same results. Here, for example. Okay, that's called in-sample, out-of-sample testing. Here, for example, we have 8 years worth of data. 75% of the whole data set is dedicated for in-sample testing, and then the rest is for out-of-sample testing. So if we look at the top one, you see we have very great in-sample performance. It's basically a steady up, short period of underperformance for about half a year, and then it continues going up. Then on out-of-sample, it went up pretty nicely, but then it round tripped. So that's not good. Let's see what we have as a conclusion in our dashboard. Verdict, promising. Yeah, it is profitable at the end of the year. Let's say the compounded annual growth return for out-of-sample, it's 1.3. No, it's not even promising. It's bad. Let's check out the second one. You see, equity curve is much more volatile, then out-of-sample is negative. No, I don't like it. Let's see it another promising, which is for Nasdaq 1 hour. Ooh, you see, this looks better. It underperformed for a year, then started slowly grinding higher, and then on out-of-sample, it even improved. In sample, 6.5 compounded annual growth return, and out-of-sample, 26%. Pretty nice. If I wanted to see more results, I could just scroll further, see everything I want to see, end of year returns, blah 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 blah. Okay, not the point for this video. The thing is, the conclusion I want you to make out of this, well, first is the example. Okay, I had some strategies, then I found myself wasting a lot of time, or not wasting, like spending a lot of time on testing, tweaking, optimizing strategies and parameters. But then I decided to wait, let's use AI for this. This way, I found one promising here, one promising here, or here, no, or here, or here, wherever, that I could tweak further. I have other reports. Just check out the new one. This one is for session strategy. Check out the best one. Just look at this. 14% annual in sample and almost 40% out of sample. That's really promising. I basically yielded it all in a couple of days. And now I'm still able to brief test it, let's call it this way, a bunch of strategies. I can test them in bulk. And after that, I pick out top 10 and I go to MetaTrader or whatever engine I'm gonna use to execute them in, and manually test the strategies, the logic behind it, try to understand it, and then decide whether I'm gonna commit to it for the next 3 months, let's say.